Good afternoon, everybody. It is 1 o'clock in the afternoon on this Friday, the 5th of October. Last day of the trade week. Last day of the first week of October. All right. Equity markets. Take a quick little walk over there. They are down quite a bit. Another nearly 2% drop in the NASDAQ, the Dow, and the ES all down over 1%. I mean, it's a bloodbath. All right, let's jump it right into cryptos though. Bitcoin, I mean, I don't know how tight of a range you want to be trading in, but that's what we've got going on here. Has just been kind of doing that. I mean, it's pretty nuts how tight this range is. But we shot out of that trend line, trading up. We'll see if we have any response moving forward. Ethereum doing its thing. Not much of any action there. I mean, folks, this is mostly just turning into kind of a wait and see what happens, because this is really just a it's really just kind of a wait and see what's happening on here market, because it's very consolidated and constricted. I mean, we've gone over various images and looks at how tight this range is. If we go to the daily, I mean, that is, let's put some Bollinger Bands on here and see what we got going on. That is called a squeeze. That is the very definition of a Bollinger squeeze. And when Bollinger squeezes happen, it is a precursor to a big move. If you want to know of a volatility indicator that is pretty damn good, good visuals, you're looking at Bollinger Bands. That's a very good indicator of volatility, which there is almost none. It like doesn't exist right now. It's like it's just down. So yeah, I mean, we've got pretty nice setup here for a squeeze. Actually, the squeeze has already happened. We're just waiting for the breakout. So literally, this is just a wait and, you know, park and bark. We have had some breakouts on smaller time frames that may bode well for us going into the looking at the let's see here. Yeah, where's Ethereum's? Yeah, Ethereum just is entering in squeeze territory, actually. It is just getting into it. We're still trading up on the day. Basic attention tokens actually caught a bit of a bid, pushing higher here on the daily. It's moving a little bit. IOTA has a tiny bit as well, but IOTA's in a tight squeeze. I mean, ever since really the end of September, last week going into this week is where we've been in a squeeze. And squeezes are, this is a really flat distribution. I mean, we haven't seen this kind of activity in a while. If we have to, like for IOTA, we have to go back a year ago. For Bitcoin, for Bitcoin to see this type of no volatility, I don't like that one. Where's Coinbase? There we go. We would have to go back, well, before 2018, probably looking at September of 2017. So 13 months ago is where we see we had the tightest area prior to where we're sitting right now. The only other place where there was some kind of constriction was right over here, and this was in July, the first half of July. Otherwise, this is a this is a pretty tight range. What do we look like on a 4-hour chart? Yeah, pretty much the same thing. Just really consolidated action. What is good to see though is that on the 20, so there's a 20-day moving average here. That has been a pretty classic break zone. So we'll keep an eye on that. We're coming up to test this trend line again. It has been tested frequently. It's held as support. We'll see if that continues. Ethereum, very much the same thing, entering a squeeze. I mean, it is ridiculous how tight these ranges are on a daily. We'll see if there's a bounce off the 20. Yeah, it's nuts. I mean, folks, this is really just a very simple like these are where trading, like if you're trying to trade this consolidation on a daily time frame or an 8-hour time frame, these kind of conditions are where traders' accounts go to die. Okay, this is where people end up always getting into a range and they end up buying at the top and selling at the bottom. Okay, because every time you're in a range trade and you're trying to go long or short, you're always looking for some type of confirmation in a range. And then by the time you get some type of confirmation, you've taken a breakout trade you thought, but it actually was just a move to go lower. And so you're constantly in this decision of, is this going to be the low here before it breaks down lower? I'm going to sell, take the loss, or is this going to be the breakout higher? And then excuse me. Yeah, it's not an ideal area to be inside range. Some traders love range trading. Some really do love it, but otherwise it's not the. I mean, I'm not a. I don't know. I'm not opposed to range trades, but that if it was something like currencies, that's different. Or if it was something like the equity markets, that would be different. For cryptos like Bitcoin and the crypto market, constricted ranges that are forming a Bollinger Squeeze on a daily basis. When I say daily, I mean the daily chart. So on a daily chart, if I'm getting this kind of action here, that is telling me to not be participating in any type of range trade. That this is just literally a sit and wait, a park and bark. Okay? Now, looking at this, we see, so there's, I mean, this has not moved much, folks. I mean, we don't, I mean, you really don't need me to tell you that, but what is the price distribution range we've had if we go from the low of Wednesday to the high? Well, that's the high, but really we've been trading within this zone the most. I mean, we're talking about a $274 trading range. $300 trading range is what we've been in. That's nuts. Okay, this is a very constricted trading range. And again, we can just see that the extremes keep getting tighter and tighter. I mean, I don't know what else to tell you. This is a tight range. I mean, it's nuts. And so what we do is really we just wait. I mean, I know that's not an exciting thing to hear, but we literally just kind of wait. But then if you're using Bollinger Bands as like a indication of volatility, which I think they're great for that, but also actually, excuse me, Bollinger Bands in conjunction with the Ichimoku system is actually pretty nice too. You can get kind of a hint of a false breakout or seeing if something's going to sustain. When you look at, if we look at like a 4-hour chart or a 1 hour, and when we see prices break out of an area like, let me see. What is this? Is this this is Bittrex. Bittrex is stupid. Bitfinex, how's that? Yeah. So on Bitfinex, one of the things that's a sign of strength is when you have a breakout and then you see candlesticks closing or wicking above the band, and in the inverse for bearish. So when you start to see trades up above the band like this, and it's holding, that's a sign of strength. You don't want to short that kind of action, okay? You really don't. But if you see something like this, you see this breakout of this consolidation of this Bollinger squeeze, you get a drive down, it still looks bearish. If you start to creep back into it and you're not selling any lower, if the band is holding as sort of a resistance, then that's where you take a trade to the inverse. That's where you see a false break. And you can do that also by looking at an oscillator or a couple of oscillators to see what levels they are at. So one strategy that I used to use quite a bit was looking at Bollinger squeezes and relating the Bollinger squeeze to the RSI and the composite index. Because if you get a breakout above or below the bands and you're in an extreme condition already on like a 4-hour chart or higher, you have a really high chance of that not continuing. Okay. Whereas here, you know, we broke out of this and we started to test it higher at these levels, but they'll stay there for a while, because once you start to see a couple candlesticks with wicks above and price closing, or there's a candle body of a candle around here, then we're looking at a pretty strong moving trend. Okay. I mean, here's an example of a very strong bearish move. You know, when you start to see things closing below or above the cloud, that is a sign of strength, and you don't want to really deviate from that too much. And additionally, people will then take the first, they'll take the they'll treat this 20 period moving average. It's just a simple moving average. People will treat that as the first level of support or resistance and trade it. So like the first time, you know, you have a breakout down below, the first time you test the 20, you would short the pullback to the 20, whether it drifts over it or it moves up to it. Oftentimes that first test of the breakout continues the move. Okay. Yeah, I mean, it's just literally a waiting game here. There's not much to take a look at. I was looking at Coinigy. Oops. I thought I had it pulled up, but maybe I didn't. So if we look at Coinigy, look at the hourly. I mean, this is Binance, Bitcoin Tether. This is just a big bull flag, folks. It's just a bull flag. And I tell you what, we're almost getting a nice trade a lot of trades we looked at yesterday are getting to be in a very nice bullish condition in the Ichimoku. We need price to break above the cloud, which coincidentally would also bring price above this current range that we're in. So that's what we're looking for. This is, and the order book is pretty constricted too. I mean, it's pretty nuts. Look at Ethereum's on Binance. Similar thing we've got going on here. Flagging to pennant forming, finding support at the conversion line. The cloud here, I mean, it's staying in the 220s. Really has not moved much. Forming an inverse head and shoulder pattern here, though. That's kind of nice to see. I mean, it's about as constricted as we've seen price. And when you see prices getting tighter and the volume's dropping, that is always a sign of big moves coming. And so you really just have to park it and wait. And if you've got buy orders, like I've got some buy orders in some, like if this was a different chart, if I've got buy orders right above those breakouts, I don't have any stops set. None. Okay, because this is, here's my line of thinking on this is that, all right, there is a case for another leg down, but given the season and the time of year, that move down, the length of time it would spend there would not be very long. So I'm fine taking some paper drawdown. That's cool. What I really don't want to miss is any long opportunity. Okay? Really don't want to miss any long opportunity. And why would I not use a stop? I had a little sound and I don't know what that sound is too. Oh well. Why don't I want to stop is because it'll more than likely get tagged. Cryptos and Bitcoin, when they get into these tight ranges like they're in, and then there's some type of breakout, there's often a huge whipsaw event that happens. If you're familiar with trading Forex, it's kind of like the price action that you experienced today. You got these extreme levels that were traded like, what do we want to look at? The euro dollar. Looking at the hourly here. Look at the range of distribution on that 7 o'clock candlestick. The high of 115.38, low of 114.83. Like a 50 pip swing there. That's a big swing. Not a huge. I mean, I guess it depends on your. Depends, but that's a big swing, and we will definitely see that in Bitcoin and Ethereum and the rest of the crypto market. There's a real danger to having any protective stops set here. So, and that's really up to each trader to decide themselves whether or not they want to use stops. But I'm not. I refuse to use any stops. That is like a invitation for somebody to come and take my money. And these markets are very honest, and the order books are never spoofed. So yeah, I like seeing Ethereum find support on that 20 handle. All right. Let's look at like Bitfinex. Where are you at? BTC USD. Bitfinex's volume has dropped quite a bit. And I didn't know why until I started doing some reading last night. And I came across a really fascinating article I want to share it with you. I wrote an article kind of like this yesterday, but this was way more in depth than somebody has already written. I mean, there's been a lot of written about it, but this is an amazing one. So, Tether is a scammy scam. I've never liked Tether. I've always thought Tether is a scam. And we went over this a little bit yesterday, but the issues with Tether is that nobody knows the actual supply. Okay, nobody knows what Tether's real supply is. Okay, they have about the same amount of credibility for accounting and auditing as Jordan Belfort's penny stock. Brig and Stratton, was that the name of it in the 80s? Bitfinex has all of the integrity and and Tether and Bitfinex. But here's the thing. So this is what's interesting is that, I mean, the guy wrote like the audits have never been they've never been completed, and then one they did do was with a law firm that does not specialize in any type of audit, and they both bank at the same bank. Okay, like it's this Noble Bank in Puerto Rico, which is going under. They're selling, and that's where Bitfinex and Tether are at. They used to be with Wells Fargo, but Wells Fargo shockingly wisely, Wells Fargo did something right, kicked them out, and yeah, there's all these connections here. Okay, this isn't conspiratorial, but there's a lot of bad eggs involved in Bitfinex and Tether, and Mt. Gox representative John Betts. This is great, but wait, there's more. John Eugene Sullivan, where's this image at? This right here. It's like a huge collection of douchebags all in one, okay? In Bitfinex and Tether. And one thing that this guy did right here, like here we go. So there is like really, really crazy amount of Tether that is way more than what they say there is. Okay. Bitfinex, it's like the amount that is out there is way more than is exposed. So basically they've been printing out tethers. I mean, that's something we've all known about, but what's going to happen is Tether's just going to become a victim of monetary policy. What happens if you print too many dollar bills all over the place? Or actually, what happens if you're in Venezuela? If you're think of Tether as Venezuela with bolivars. Just keep printing paper currency, but what happens? You get a shit ton of it and it's worthless. That's going to be that's essentially what's going to happen with Tether. Sooner or later. But real USD or stable coins like True USD, those actually have like financial regulatory agencies monitoring them. They have accounting, like well-known accounting firms that are backing up the 1-to-1 rate. Hang on, just checking this. Okay. If there's that going, what else? There's a lot of stable coins coming out that are safer to use. And this is going to be an issue for Tether because they won't or can't account for all the Tether that's on these exchanges. And one of the top 20 exchanges, what is it? What is the name of it? Something. Damn it. I don't remember. But they've dropped Tether. They've switched to True USD. Okay? Once exchanges start abandoning Tether, there's going to be a waterfall. Okay? There's going to be a massive liquidation of Tether into other things like cryptos. It's going to be bad. Also, Bitfinex and Tether, they're the same thing. They're one and the same. They have the same CEO. Bitfinex is, shockingly, this has gotten a little better over the last few days, but this is Bitfinex. This is the Bitcoin US dollar pair. And they spoof all the time. We went over spoofing the order books yesterday, but again, spoofing is when, okay, let's say I want to act like I'm going to be putting in a shit ton of orders here. So I would put like a 1,000 order. I put it out on the bid that I want 1,000 Bitcoin at 6581.8. Okay, everybody else is going to see that. They see that order and they're like, oh my god, I really want to get into that. And so people start buying the bid. They start getting into that because they think prices are going to go higher. But then what I do is right before it gets up there, my program or me manually, I'm just going to, like, hey Santosh, I'm just going to pull the order off. Okay, I'm going to pull 1,000 contracts off the order book. And then I'll reverse my position, because now everybody sees that 1,000 order is not there anymore, so they must not want to buy. It thins out the order book for 1,000 contracts aren't there anymore, and I can just reverse positions to short, and then people start selling. Okay, it's kind of a it's illegal. It's illegal. After, I think in 2010, it became spoofing became illegal. But it happens a lot on a lot of the non-US exchanges. Oh man, it is a common occurrence. The other issue with Bitfinex is, well, it's got a predatory margin rate, but naked shorting. Now, they have peer-to-peer lending. Kraken kind of got in trouble for this a little while ago, a couple of years ago maybe. But when I short something, like if I have, let's say, if I want to short on Bitfinex, I have to borrow Bitcoin. If I want to short Bitcoin, I got to borrow some Bitcoin. So they have a peer-to-peer lending service on Bitfinex. Bitfinex peer-to-peer lending. So, and if you have a Poloniex account, then you're familiar with this. Although Poloniex is canceling margin trading for U.S. traders, U.S. accounts, but you can put up your crypto. Hey, Tree Truffle, you can put up your crypto for a certain amount of interest for a certain amount of time. So you could have up like 10 Bitcoin and have it available for 10 days. So over a 10-day period, anybody could borrow that Bitcoin from you and use it. The thing is we have another accounting issue with Bitfinex, is that we don't know what the real supply is, and because it's probably not honest. And of course, I'm making assumptions based on disliking them. But I mean, they're not transparent. That's the issue. They're not transparent. So naked shorting is something that is illegal as well. If you want to short in the stock market, okay, shorting in futures and forex is different than shorting in cryptocurrencies. What is the best exchange? Binance, and I like Bittrex. I think Bittrex is actually going to be a pretty big exchange here in the future. They're going to all US dollar pairs. They're slowly transitioning into that. I think Bittrex will be a bigger player, but otherwise, I mean, hands down, Binance. It's very, very, very smooth. So is, let's see. And if you're in the US and you want to short and you don't have enough money to qualify for an accredited investor to open up an account, or you don't have an LLC to open an account on on another place like Bitstamp or other places, then Kraken is. I used to think Kraken was really, really, really. I've changed my mind on Kraken. I actually like them a lot better now. They've done a lot to improve their. Well, aesthetically, they still suck. They have the most horrid. They do have like the most horrid order system. I mean, they could do a lot to make it more visually pleasing, but from a, being a transparent side of things, they've done a lot to be more connected to their customers, and they've done a lot more to, provide good services and be available. Kraken is doing a lot better. And sometimes I think you have, like any business, I mean, if a business has done something so bad that it's gotten the crap beat out of it in the public eye, those are sometimes the places you'd like to go to, because they're going to do everything they can to get your trust back. And Kraken has done enough for me to trust them again. I actually am pretty pleased with them. There's still some issues, but not related to issues of transparency or sneaky stuff going on. And they're the only other option for retail traders to use for shorting. But yeah, Kraken's good for that. Otherwise, Binance, hands down, Binance is great. I liked Bittrex a lot more, back in early 2016. Early 2017, and then going into the end of the year. I mean, they had a lot more liquidity. The only thing bad about Bittrex is that they do have a lot of really bad coins. They don't have a lot of liquidity. Hopefully that comes back sometime, but yeah. But naked trading is essentially you are shorting without the borrow. If I wanted to short some Microsoft, I would have to borrow it. I would borrow it from my broker, basically. I mean, most brokers like TD Ameritrade, if you have stock, you're basically kind of giving them the broker the right to take your stock and borrow it for people who want to short. And then you may or may not get some fee for that, because borrowing stock to short, there's a premium attached to it, so you better know what the hell you're doing. And it's a fixed supply, so you don't. It's not like futures and forex. Shorting is different than shorting like cryptocurrencies here. So on Bitfinex, there has to be an equal amount of Bitcoin available to short as there are short positions or exposed Bitcoin. I mean, it has to be a one to one, and it's definitely not. And so essentially what that means is that you can, a good stock example of something that's been naked shorted is overstock.com. Okay. Naked shorting is a popular tactic for people to artificially move something, and yeah, but there's some shady shit that goes on with Bitfinex, and yeah, I really don't know how to I'd steer clear of it. I would. And I'd steer clear of Tether. I wouldn't hold on to any Tether. I actually put out an alert on Telegram yesterday that I'm not holding any Tether anymore. Zero, zip, zilch, no Tether. Because, folks, there's one exchange that has already gotten rid of Tether as their dollar swap coin. And you can bet your ass that as soon as another one does, if there's going to be, if Coinbase, not Coinbase, if Binance or Bittrex or BitMEX or whoever, Bitstamp, if they were going to get rid of the US dollar Tether pair, oh man, there would be some huge issues. Oh man, it would be bullish for cryptocurrencies. It would just, it's crazy. But I would not be sitting in Tether. Anyways, this article is fantastic. I'm going to put it in chat here. It's very well researched. Really opened my eyes up a lot. Kind of confirmed that I already didn't like it. Yeah. I don't think you want to be sitting in any Tether. Oops. Remove any addresses. What? That's weird. Okay. Why does it give me that? Oh well. Tether is the devil. Oh, full disclosure, I do trade Tether pairs. Okay? I do trade oh, look at this. Bitcoin price watch. Currency's volatility has seemingly dropped. Really? What makes you say that? Not the Bollinger Squeeze. Oh, man, that is just... For those of you who weren't here when we started talking about this, Bollinger Bands are a volatility indicator, and there has not been this tight of a Bollinger Band all of 2018. That has not happened. The last time we saw a massive constriction like that, we'd have to go all the way back to, we're probably talking September of 2017. Okay? This is like technical analysis 101. When prices consolidate and ranges constrict and volume drops off, that is a big red truck going across saying, get ready. I mean, this is stuff's coiled and ready to go. Again, there is the case of a lower move. I mean, there definitely is. You could account for a move down, and for a probable third leg. But the thing is I don't know how realistic that is. If you think about it, we have not made new lows since February. And somebody's going to be really picky and say, oh, but the low in February of 58.73, that was actually 57 or 5600 depending on the data. Still, really, as a value area, has not made a new low. Okay? The bear market, they're short. The bear market went until February. Everything after that, well, we could probably say till June. The rest of this has all been consolidation. Some people might say this was all consolidation. Some people might stay till after June, after the kind of the second low test there. But we've tested this entire zone here for quite a while. It is a very established base. I mean, you don't need to do a lot of analysis to see that this is a pretty massive zone we're in right here. You know, this zone that we're trading in is one of the highest volume nodes in Bitcoin's history. And certainly if we do year over year, or even like August, last August to now, we're sitting right on the volume point of control for this time frame. I mean, we're sitting right on support. Prices have been oscillating around between 7 and 6,000 for quite a while, and there's been a crap ton of volume traded in here. Now just put this into perspective, okay? This amount of volume has only been trading, okay? The amount of volume trading in here, just look at this. Okay, because people will say like, oh, there's not a lot of participation in the market. Okay, yeah, volume may have been down, but like this, oh, damn it. Well, you don't need, just this entire zone here, we're looking from November of last year until now, okay? Almost a year that we've been sitting in here. The rest of this stuff, all the way in the past, all these other volume nodes, with the exception of this chunk here, this has taken, to get this, this volume bar down here, let's just zoom it out. And make it look a little better. This took how many years to form? From 2014 to 2016-ish. Actually, we go... This is 33% of the volume. Man, this actually goes on for a while. To 2016? Holy shit. Yeah. When it was very, very cheap. Okay? Very cheap relative to now. It was very cheap. We look at the volume since then. Let's go from bottom over here in 2017, March of 2017. A lot of volume traded in there. There's a stair step up here, folks. Volume has been stair stepping. High volume node. High volume node. High volume node right here. Where's the next high volume node? No idea. Probably around 17 and 18, where we trade up a stupid amount and then we come back down to trade this area again. Not this, but up here. This is a crazy, powerful, accumulated zone. And I really don't see that failing. It could. We could get a big old bear move down, but again, the time it would spend down there would not be very long. And in fact, that might be one of those catalysts that is required to get out of this. There may be a need to flush prices down towards 5K to get market entrance in again. And then, I mean, we know what happens when that happens. It doesn't stay there very long. We won't experience what we've experienced here from December to October. We would definitely observe a big drive in price. Big drive higher. So, yeah. That's why I'm not setting any stops. All I've got is buy orders above this consolidation zone. Above this Bollinger Band, this Bollinger Squeeze here. I mean, this is... Here's the other thing is sometimes squeezes can last a while. Cryptos, that doesn't happen. This is already kind of getting into the pressure zone of a breakout. I mean, we've been sitting in here for a week, over a week, and things don't sit in here for that much longer. Getting into the weekend, definitely see some activity. To the end of the day today, actually, Friday, there's some sneakiness that goes on. We could definitely see some activity this Friday near the regular equity market close. So, yeah, I mean, any way you look at this, where's my... And I want the clouds. Yeah, any way you look at it, it's pretty good. just as tight as a range as you're going to get. Good Lord. It's nuts. From the Ichimoku perspective, oh man, the daily actually doesn't look that bad. I mean, it's getting easier and easier for price to break out of here based on a daily chart. I mean, it's not that difficult anymore. We don't have to worry about these, a very large cloud downtrending for prices to break higher. This is actually very, 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 very doable. The 4 hours got a really nice, clean. The 1 hour too. I mean, the 1 hour is just. I don't know how more easy you get for a long entry here at 66.25. Break of this high. Lagging span and price, are both above the cloud. More importantly, lagging span's above price. Same with the 4 hour chart. Get lagging span back above price and above the cloud with price action 266. Yeah, it's the same zone. I mean, this is a very clear entry zone, and then there's, all the evidence of a market turning based on a daily. We see that thick clouds often appear at the top or the bottom. If we're in a bear trend, thick clouds will form prior to the end of a bear trend, and vice versa for bulls. So, we're right in that zone. I don't know what else to tell you. I don't know how else to describe consolidation and you just park and bark. That's what I call it. Just sit here. And, oh my God, do not do this. Do not spend your weekend doing this. You're like, oh God, it's not moving. I'm going to go to 5-minute chart. And then you watch this shit happen all day long. This is why I say this is where trading accounts go to die, because this is such a I did this all the time. I'm like, oh, I want to trade, I want to get in. And the whole time you're like, oh, good, rally. Oh my God, it's going to die. Oh my God, it's rallying. You just put yourself in an emotional roller coaster, and it's just not a smart thing to do. When all you really have to do, if you want an excuse to be participating in the market, but also like spending time and have a life, this is the conditions we're in right now. This is the perfect opportunity for that. Because all you have to do is, if you're using TradingView, is you just right click on the screen. Okay, it won't do it in there, but you just right click on the screen and add an alert, and you can email yourself. The best for trading or security? Let's see. First off, for security, there's nothing that beats a wallet. I like Exodus wallet. That's personally one of my favorites. For things that Exodus doesn't hold, like Cardano, I use the Daedalus wallet. But Exodus wallet is awesome. It's best. But as far as for security, Binance is probably, it's got to be one of the best. I don't know what is considered the best security, but Binance seems to do very well. Kraken is doing well. Bittrex does well. OKX does fine. It seems like the only ones that have been getting a big hack lately, they're in South Korea or Japan. It's been kind of a while since we've had a U.S. based hack, so that's good at least. But yeah, if you're holding anything for a long time, like you want to hodl, I pulled it off an exchange and put it in your wallet. 1, you won't be tempted to trade it. 2, it's easy to keep your eyes off of it and just let it grow so you don't put it back in to try and trade it. And 3, it's just way more secure. It's just way secure. You should check out Exodus wallet. I kind of go the paranoid route with this stuff, so I have my wallets on a laptop that doesn't have an Ethernet card. Well, okay, sorry, it does. It doesn't have Wi-Fi. Whenever I want to update the wallet and sync the blockchains, I hardwire it in with Ethernet, and then disconnect it. But that's where my wallets are at. Is that a little overboard compared to what other people do? Hell no. Damn, the worst thing one thing I would never do is a paper wallet, because oh my god, I would lose it. I would seriously lose my 12-word phrases, and then you'd be screwed. Because one thing about cryptocurrencies is that it is, if you forget the password or you forget the 12-word code, this is not like sending an SMS to your phone to verify you are who you are and then putting in a code. You're pretty much effed if you don't keep track of those things. And it's so easy these days to just kind of skip it and say yes and say I did copy my 12-word phrase, blah, blah, blah. Oh my gosh. I have met so many people who have lost a lot of money. Well, it's not even lost. They know where it is. They just can never access it. It's just the worst. So, I mean, if you're going to store it on a PC, I mean, make sure it's one that's really not connected to a network anywhere, I guess, is the best thing. Or put it on a thumb drive of some sort. You know, that's the next best thing. But yeah, I mean, yeah, this is, it's a park and bark, folks. There's really not a lot else to discuss regarding how to take a peek at this market. One coin that I think is really going to catch a really fast drive up is Ethereum. I know Ethereum is mostly crap, but Ethereum is, even in some ways, underperforming Litecoin's chart. And I know some people don't like Litecoin either, but Litecoin, it's it's still trading right here. I mean, this is this 1/8 harmonic. This yellow line is the 1/8 harmonic. This is the final support zone for Litecoin between $56 and $0, or $1 rather. Okay, like there are and there's 8 harmonic levels and price ranges, and then they're subdivided into 8 minor or 8 inner harmonic price ranges, and then inside of those are 8 minor harmonics. So each major is they're the most difficult zones to cross above or below. They're the hardest price levels for prices to get through. But when they do get through, you're almost guaranteed that being your new support or resistance level for a while. And as opposed to like price-based historical dynamic levels of support and resistance, where you just find previous price action and put a support level there, where those tend to weaken the more they're tested. Major harmonic levels like this, the more they're tested, the stronger they get. And Litecoin has been around here ever since August. Since August 10th, okay? Almost 2 months. Litecoin has been in this sufferable range between 1/8 major harmonic and this 2/8 inner harmonic pivot. I mean, it is stuck in here. And this is coiled as well. This isn't a Bollinger Squeeze. It's been a Bollinger Squeeze ever since the 29th of August. And so the downside pressure here, limited. I mean, if I'm looking at a risk to reward, if I'm looking for something like one of the Coinbase pairs, I call those the majors, because Coinbase is probably the most important crypto exchange out there. It's not the best. It's not the fastest. It's definitely not the cheapest, but it is the most important from a regulatory standpoint and how it's viewed publicly and by regulators. The 192-day time frame, that came from, damn it. Gosh, it wasn't Tony Plummer. Dang it. I forget. But all I know is that the 192-day cycle, that's what this is, the law of vibration cycle. This is for cryptos, it's a creepily effective cycle. Oops. I mean, it's very, very, very sensitive to these time cycles and to these levels. BTC bottomed on the 15th of August in 2018, 2016, 2015. Really? Anniversary dates. Gann talked about those all the time. Look for anniversary dates. Like we were doing this yesterday, I think. Some of the things in the market that seem like so stupid are actually so stupid and easy where you think there's no way that is a thing. It's actually very, very effective. Like this vertical line here, this is Mercury, 188 degrees. It is the low, the all-time low of Bitcoin at 2 cents. Back on October 8th of 2010, with this data at least. But whenever Mercury 188 degrees shows up, there's usually at some important turn, not all the time. Major minor tops are found, preceding big rises. Not in the middle of anything right there. There's the triple. Boom, boom, boom. That's definitely during like a, bet that's a retrograde cycle for Mercury, isn't it? Where you at? Yeah. And there before that big move, and then boom, here we are again. One of the big behaviors out of this is that it generally seems to precede a large rise. The other one, we went over this the other day, is the Venus retrograde cycle. For those of you who weren't here yesterday, talked about a trade idea I did back on the 14th of September, and on TradingView, and I talked about the future retrograde cycle that starts on October 5th to see it's September 14th. And talk about how it's a big turning point for a lot of things, especially U.S. equities. U.S. equities are pretty much bearish during any Venus retrograde cycle, and you know that is exactly. Oh, you know what? Right here, I did one with the Dow futures. These columns here are previous Venus retrograde cycles, which are always down moves, and so. To those of us in Forex lens and those of us who've looked at this is not a big surprise because we're like, oh, well, that's normal. And then for Bitcoin, that retrograde cycle is generally, it precedes a large rise. So it's not so much like in U.S. equities, it's inside of the retrograde cycle that matters, where for Bitcoin it seems to matter more what happens after it exits. So here it is. This is June of 2012. This was Mt. Gox. Throw up in price. Yeah, futures absolutely smashed. And here's the thing, like a lot of people snicker and giggle whenever you mention financial astrology, but the Venus retrograde cycle is one that like a lot of veteran traders apparently know about, and even though they think financial astrology is kind of out in left field, The people know about the Venus retrograde cycle, so now there's this theory that, and I've known about it for years. There's this theory that people abandon positions ahead of it, and it's just be kind of a self-fulfilling prophecy. And that could be true, but hey, if you want to make your money on one trade a year with a high probability of a success, that Venus retrograde cycle would do it. As long as you're at or near an important top, either a swing high or like an all-time high. So the end of this retrograde cycle had a big drive up. End of this retrograde cycle in 2017, not a surprise what happened there. And now we are entering this retrograde cycle here, which ends on November 16th. Now, that doesn't mean we're going to be in this consolidation range all of November 16th. I think we actually probably, we trend up slightly into, in October and into November. We actually do trend up slightly, but regardless, if we're going to follow cycles and patterns and just be logical about it, and just because I'm saying Venus doesn't mean this is illogical. This is about astrology. This is a natural thing, okay? And and all financial astrology is it's mathematical psychology based on astronomy. It is just correlating the behavior of humans on the planet and in the market to astrological phenomena, because for whatever reason there is a connection. I'm not saying that planets cause things. It just they seem to appear during some type of market breakdown, like Venus. And apparently the really evil one is the Saturn-Uranus cycle. That conjunction has been at every single major market drop. Oh, no. Oh, I don't know. I don't remember. But I don't put a lot of stuff into it. But and then these wavy lines here, these green and red lines, this is the longitudinal position. This is synodic lines of Jupiter and Uranus. For whatever reason, they are very strong support and resistance levels in Bitcoin. No idea why. No idea why. They just are. The same as why in the Aussie dollar, as soon as it pulls up, I gotta make these charts. The Aussie dollar, this is the longitudinal position of Saturn, and for whatever reason, the longitudinal position of Saturn and its harmonics seem to be very, very strong support and resistance levels for the Aussie dollar. No idea why, but it just is. And clearly the Aussie dollar's starting another move lower. And I have no idea why, but in a lot of markets, moon phases matter. Moon phases typically show up near a swing low or a swing high. Not typically, but they have a high probability of being the swing high or the swing low of something. The FTSE 100. How can you calculate those wavy lines? Well, this is this is a Motive Wave, or not Motive Wave. Motive Wave is a different piece of software. This is Optima by Market Analyst. It's a professional suite of software. I think for the professional edition, and then if you want the Gann and the Astro tools, it's like $7,000. But it has the best Gann tools. I mean, they have the Square of 9, and then they also have the what else? They have like all of the Gann tools that you could ever want. They have them. It is hands down the best for my style of trading. This is the best software out there. There is no other software like this. I had to get it. I didn't have a choice. I had to get it. And then, but GPLs or Gann planetary lines, how you plot those is very easy. You can go to NASA and get the coordinates of the longitudinal position of like Mars, and you just turn it into price. So, like if it's at 100, like, okay, well, we saw mercury at 188 degrees. So that could be $188 or $18,800 or $1.88 or $18.80. You plot it according to the the ratio of the price levels that you're in, and you would do that for every day, and you could draw a dot and then connect the lines. That's up to you, but I personally like that I can just go into Optima and put in Gann planetary lines, and if I want to see, this is Mercury. What's the scale set? I need to actually do it by 100. Well, 10's okay. So Mercury, or I could look at Saturn. Maybe at, divisions of 100 though. But yeah, these that's a pretty cool software. Yeah, this is cool stuff. Anyways, oh man, I'm past my time, but again, recap. We're really just in a waiting zone, folks. I mean, I don't really know how else to describe it. We're in such a tight range here, and there's really no signal that we've broken out until we actually do bust out. So again, I'm sitting there with buy orders up top, no stops, because the whipsaw that will come out of a monster breakout may tag that stop, and I think that's just gambling. The risk to reward is way more to the top side than it is to the downside, because even if we do get a big dive down, because this is the seasonal and cyclical time period for cryptocurrencies to go into a bullish phase, that downtime should be very, very little. We shouldn't be down there for very long, and yeah, I'm just ready to catch the next public participation phase. And when I know when some lady at the grocery store asks me about Cardano again, I'll know that's the time to sell cryptocurrencies again. So, but now is the time, ever since February, to be accumulating. That's what we've all been doing, and looking forward to later on this, well, probably late next week, late this month, and beginning of next month, we should see some major action. So again, Forex Lens, folks, I'll see you Monday morning at 7:30, and the rest of you here at DeCryptoMarkets, I'll see you Monday at 1 in the afternoon. Hope you guys had a great week. Have a fun and safe weekend. Detach yourself from the market for a day if you can over the weekend, and take care of yourselves, and I will talk to you later. Bye-bye.